Good afternoon and welcome to Grace Kennedy's first investors briefing for 2020. My name is Don Webby. I'm the Group Chief Executive Officer, Mr. Masada. And with me is Andrew Masada, Group Chief Financial Officer. We welcome all participants who have joined us via this new medium for our briefing, which is scheduled to run for 40 minutes. We will use 25 to 30 minutes of this time for presentations and remaining time to accommodate any questions you may have. As you will recognize that this is the first time that we are doing a Zoom webinar, and this is aimed at improving our communications to all stakeholders. During the question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. Let me repeat that, by emailing us at gkinvestor@gkco.com, as well as through this Zoom online platform. I will do a brief presentation and then Andrew Masado, our Group Chief Financial Officer, will follow. Then we will open up for questions. Do we have numbers that we can call in or just by email? By email, okay. I'm via Zoom. Thanks a lot, thanks a lot, colleagues. Okay, so let us start. And thank you very much, everyone, for joining us. We really appreciate it. So let me start off by saying that 2019 was a very rewarding year for the Grace Kennedy Group. And we are very pleased with our performance for 2019. Let me share a few PowerPoint slides, and I'll highlight some of our highlights for 2019. The first highlight is that group revenue was $103 billion, representing an increase of $5.5 billion, or just under 6%. As you would have read or heard previously, that we had set ourselves a target of $100 billion by 2022, in line with our 100th anniversary. We are ahead of that target by $3 billion for 2019, and also 2 years ahead of our target. So we are very, very pleased with that performance. And I'll expand on that later in my presentation. Another highlight for us will be that all business segments recorded increased revenue and profits for 2019 compared to 2018. Our food division, banking and investment, insurance, and money services. So we are extremely pleased that all our business segments have shown increases in both revenue and profits for 2019 versus 2018. Profit before other income, excluding IAS 19, increased by 43%. Andrew Masada will expand on IAS 19, but just to say, for 2019, there was an increase in charge, IAS 19, which relates to pension, non-cash, for $890 million. There was also another accounting entry, IFRS 16, primarily for our high-low chain, for $228 million. And listeners would also, and viewers would also remember that in 2018, there was a one-off non-recurring charge of gain of $1.13 billion for the liquidation of GraceKennedy. So when you account for that, our net profit attributable to shareholders of the company was $4.498 billion for 2019 versus $5.01 billion for 2018. So you'd say that's a decrease of $518 million. But you have to bear in mind that when you take into account those entries, our net profit before other income was up 43%, which we believe is an outstanding performance for our operating performance for the company. Some other highlights, business highlights as we refer to it, we moved into our new corporate headquarters, Grace Kennedy headquarters, in May of 2019. Our total investment in downtown Kingston for our new corporate headquarters was just over 3 billion Jamaican dollars. We also, which was again a highlight for us at the GraceKennedy Group. Won the Governor General Award for Excellence and Best Annual Report at the JSE Best Practice Awards. Let me share with you the criteria for that award. The award in excellence speaks to excellence in investor relations, corporate disclosures, corporate governance, website design, annual report, and overall performance on the stock exchange. So that was really, really pleasing for us as a company. Just to mention a few of the companies in the group that performed very well. FGB, our first global bank, our commercial bank. I would say 2019 was one of the best in the companies in the bank's history, with a significant increase in both revenue and PBT. And we also saw an increase in the customer loan portfolio, and we are expanding our agent locations. GK Money Services, Western Union, FX Trader, Bill Express reported over 2018 increased profits, and we were very pleased with the compliance measures that we had put in place, and we are now seeing improvement in that area. We have also increased our digital transaction, and as you know, we believe digital transaction is going to be the future of this business, or a big future of this business. One thing that I'd say to the listeners and viewers is that our compliance measures are now in place. I've seen significant improvement. We are investing about 4% of revenue of GKMS right into compliance using technology, and really putting together a good team in place to ensure that our compliance measures are in place. We have said that going forward, we really need to look at our customer service, the whole consumer experience for our Western Union customers and clients. We're also going to be expanding the network. We currently have 156 locations, and the plan is by the end of 2020, we plan to increase that to 300 locations. And we're going to be doing a lot of work on these locations to improve, as I said before, the customer experience. In terms of the insurance segment, Allied and GKI and our overseas entities, we saw increased revenue and PBT. So we are quite happy about that. I think the most heartwarming performance for me, certainly for 2019, was the performance of GK Foods USA LLC. You'll recall that in 2013 we did an acquisition of a U.S. food company with a Hispanic brand, Lafay. I refer to the company from time to time as Lafay. We merged the company with our Grace brand business, and 2019 was an exceptionally good year. That company significantly surpassed all our expectations in both profit and gross margins. And as I said to my board of directors and my team, this company is going to be a game changer for the GraceKennedy Group, and the best is yet to come. I think Jamaicans overseas and Jamaicans who visit overseas, I'm sure they'll agree with me that when you walk into a Walmart or a Publix or a Shop and Rite and see the range of the Grace products in those supermarkets, it's a very proud feeling, not only for GraceKennedy, but as a Jamaican company and for Jamaicans that we have really crossed over in the mainstream. So let me use this opportunity to congratulate all of my team at LLC and the wider GraceKennedy and the board for this outstanding performance of our USA company. Our domestic food business also recorded significant growth, both in revenue and profits. Grace Foods and Services really is our domestic business that distributes the Grace brand. That company is really the foundation of Grace, as you will understand. And 2019 was truly a record year. The Grace brand in Jamaica grew significantly, and most, if not all, of our products showed good growth. So really, really happy with our domestic food business, especially Grace Food Services and I should use the opportunity to thank everybody for really being supportive, being loyal to the Grace brand over the years. Big improvement in Jamaica. GF UK, we're having our challenges there. Our brand, Nourishment brand, has been declining for the last 2 years. That affected the performance of the brand. We have done a lot of research on Nourishment, and the recommendations coming from the marketeers is that we should actually introduce a new SKU for Nourishment and put it into a bottle. So that was launched in the last quarter of 2019. We have started to sell in, as we would say in the trade, for 2020. And we are really hoping, we have done the work, we have done the research, that we'll see a turnaround of Nourishment in the UK very shortly. So that was 2019. We are now focused on 2020. And let me say, while I celebrate and recognize my team and the board for the outstanding performance in 2019 in terms of revenue, I believe that there's a lot more work that can be done, and that the more profits can be extracted from that revenue that I just mentioned. And by the way, just for information, while we are 2 years ahead in terms of our revenue target, I have now set a new target, which I will disclose at the appropriate time. So you may ask the question, Don, okay, revenue is good, revenue is growing. How are you going to convert that so more will flow to the bottom line? Here are some clear strategic initiatives that we have for 2020 with clear goals. As you hear me say all the time, what gets measured gets done. So we need to improve our margin management, and that's mainly for our food division, and plans are in place to improve on the margin management. Improve our group efficiency ratio. We actually have 2 live projects in place now, both in the central finance units for our financial services division and our food division. And what that is about is becoming more efficient by using our business processes a lot smarter, and it all boils down to enhancing the productivity of our staff. And we expect for 2020, based on this exercise, you're going to see some improvement in our efficiency ratio, and therefore more flow to the bottom line. Of course, using technology in a smart way is going to be the key driver of this efficiency improvement. We're going to continue to look at M&A transactions and being very focused, or we are being very focused on that. And in fact, one of the strategies that we have is that we're going to create a special M&A unit in the corporate headquarters of GraceKennedy, where that unit can focus on expanding. We're also in discussions with investment bankers, both locally and overseas, to assist us in this drive of acquiring companies that will add value to the GraceKennedy group of companies. I'm sure at the appropriate time again, we'll make some announcements on acquisitions that we are working on. I'll briefly mention the most current one, Key, at the end of my presentation, Key Insurance, at the end of my presentation. This is something that has been proven a challenge, colleagues, friends on the line and viewing, the management of FX volatility. So just to share with you some numbers, when we finished 2019, December 31st, the exchange rate was 132.57. On February 13th, the rate went up to 142.81. So it moved from 132.57 to 142.58 in just over a month. And now it is down back at 136.31. So when we speak about the volatility of the FX rate, this is an example, a live example within the last 6 weeks that we are dealing with. GraceKennedy is in a very fortunate position that we are net sellers, net earners of foreign exchange in the market. We have a team in place to see how best to deal with this volatility. Because, when you, for example, price in your food business and the dollar is 140, 136, and it goes up to 142, and you have to replace those goods at a rate of 142, it becomes very tricky in terms of your pricing strategy, and that can have an impact on your margin. And in fact, if you're planning forward in terms of capital expenditure or investments in your factories or using technology, and you present to your board the justification at a rate of 130 or 132, and the dollar goes to 142, that can negatively impact your IRR, your internal rate of return, or your return on investment. So this is something that we really have to come to grips with, the volatility of the rate of exchange, and it is in fact impacting the group in a negative way. Manage the volatility of IAS 19, you recall that, and let me share with you that $1.22 billion was charged to our, and it's a non-cash item, was charged to our P&L for 2019, and Andrew will expand on that. On the other hand, $3 billion gain was carried to our other comprehensive income. And this is all about IAS 19 and how to account in conformity of IAS 19. Andrew, I'm going to ask you if you can expand on that, because that's a big number. Yes. And then we're going to continue, as we said, to invest in our brands with the introduction of new products, both in our food and financial services. And digital expansion is going to be a key focus for the GraceKennedy Group, and we're going to be launching some new digital services and products, certainly before the second quarter of this year. So in summary, good 2019. Revenue was exceptional. Looking at 2020, we now believe that we need to extract more of that revenue to flow to the bottom line. And I've outlined some initiatives to you and to others of how we believe that we're going to achieve that objective. 2020, for me, is going to be a very positive year for the GraceKennedy Group of companies. So in wrapping up, before I hand over to Andrew Masado, let me say that there are two things that I'd like to mention, and I'm just trying to find my papers here. Just give me a minute. I'll introduce it by saying that that we have a pre-question session, and most of the pre-questions was about the coronavirus, and Don, what is the impact of the coronavirus on the GraceKennedy Group? So I would like, before the question is asked, just to speak a little bit about the coronavirus, COVID-19, and how we are dealing with it at the GraceKennedy Group. First of all, let me say that at GraceKennedy, we have a very robust BCP, Business Continuity Plan system in place for many, many years. Every company in the GraceKennedy Group has a designated BCP officer. A few years ago, we actually have a pandemic guideline in place for many years, and it's now a matter of rolling out those guidelines across the group, which started 2 to 3 weeks ago. We also have a top risk system where every company in the GraceKennedy Group has to present to me and to their respective boards their top risk, which is then analyzed and mitigating actions put in place. So here's what we have done at GraceKennedy specifically for dealing with the coronavirus or COVID-19. I've established a steering committee chaired by our Chief Risk Officer, Leanne Steele Bruce, and that steering committee has to report to me as the Group CEO on a weekly basis. And if there's an urgent matter, obviously it's on a daily or hourly basis. So we have a steering committee with senior executives across the group monitoring basically on an hourly basis of what is happening with the coronavirus and reporting back to me. Operationally, interestingly, we have done our checks. We actually have 2 months supply of all the finished products and raw materials. Remember, GraceKennedy in Jamaica, we have 6 factories. So we have raw materials and finished products from areas that we would have bought which have been affected by the coronavirus. As part of our planning process, even before this was announced, we have a system where we must have alternative suppliers. We have activated our alternative suppliers who are not in the affected area to replace the products from the affected area. So we are on top of that in terms of 2 months supply, all finished products, and all finished goods, and alternative suppliers are in place at their appropriate time. The second one is that effective yesterday, we have put in travel restrictions on all GraceKennedy staff, and the GraceKennedy staff can only travel on essential business, and it will have to be approved by me if they so desire to travel on essential business. So, in a nutshell, and as a corporation, I think we are well prepared to deal with the coronavirus. It's very frightening when you read what is happening throughout the world. So we have to play our own part and do what we have to do. Okay, and I'll be happy to answer any more questions you have as it relates to that, but I thought I'd highlight it, what we have done before opening up for questions and answers. Sorry, the last point that I'd make in terms of the coronavirus and the impact on the GraceKennedy Group. Obviously, I think it's going to have an impact on the Jamaican economy. And in fact, it's going to have an impact, or it's having an impact already, on the world economy. So we're going to have, tourism, I'm sure, will be affected in other areas. So we're going to have to really sharpen our pencils and those strategic initiatives that I outlined for 2020, really focus on them in terms of being more operationally efficient, because one can expect if the Jamaican economy slows down and the global economy slows down, our revenue line is going to be under some amount of pressure. Having said that, I really want to use the opportunity to thank our board of directors, our very hard and dedicated board of directors, chaired by Professor Gordon Shirley, our employees who have really gone above and beyond everything in terms of these results. And they are the ones that I really want to salute, the great team at GraceKennedy. I think, I hope I don't sound too boastful, but GraceKennedy, we have the best team, not only in the Caribbean, but for me, in the world. And that is why you are seeing all of these great results. I also want to thank our shareholders for their unwavering support and loyalty as we strive to realize our mission and vision, guided by our core principles, which will never, never compromise, of honesty, integrity, and trust. Thank you, and I'm now going to hand over to our group CFO, Mr. Andrew Mesado. Andrew, over to you.
Thank you, Don. Yeah, remote.
Oh.
Thank you.
He has a fancy remote.
Good afternoon, everyone. I'm just going to give you some brief highlights on the performance of the group for 2019. As you heard from Don, this was a historic year, 2019, for GraceKennedy. We actually achieved revenue of over $103 billion. First time we're achieving revenue over $100 billion. And as was previously mentioned, we're ahead of our target in this historic achievement, and look forward to achieving greater targets going forward. In terms of our profit before other income, at $3.74 billion. This is actually an increase of over 90%. And this line is a very important indicator of operating performance because what it is showing that for core operating activities, before any other income or one-off items, we're significantly ahead, almost 20% ahead of the prior year. Our net profit after tax at $5 billion is down. However, as Don mentioned, there were some one-off items which I'm going to expand on the next slide, just to give an indicator. But one of them was in 2018, we had a one-off liquidation gain of $1.13 billion. And so if you look at that number, if you normalize that number compared to the prior year, we'd actually have been ahead by over 13%. So really good performance in terms of our core operations. We continue to grow our asset base. Our assets now stand at over $150 billion, a 14% increase. The main areas of increase are things like our fixed assets, the construction of this building, and also improvements to our factories. We had improvements in our loan portfolio at First Global Bank, and also our investment portfolio. So strong growth in our asset portfolio, in our asset base. Market capitalization increased by 9.4% to $69 billion. And this shows an increase for shareholders, or increase in shareholder value. And we know you're happy by the improvement in the stock price over 2018. In terms of dividends, you would recall that in 2019, we actually updated our dividend policy. So we're now paying dividends 4 times a year. We started this in the first quarter of last year. We're going to continue paying 4 times a year. And last year, that improved our dividends to $1.54 billion, almost $200 million increase, or 14.9%. So very strong return on your investment. In terms of some of the significant items that affected the P&L last year, just wanted to focus on some of the significant items. As Don mentioned, IAS 19, which is the accounting standard, deals with post-employment benefits. This increased by $890 million to $1.22 billion. It's a non-cash item because really this item represents accruals that we have to make, provisions that we have to make in relation to our pensioners and to our employees who will become pensioners in the future. So this is really putting aside a provision to honor those obligations when they come due. But a significant increase, and a lot of this is affected by actuarial assumptions, things like what we expect the long-term inflation rate to be, where do we see interest rates and the discount rate going forward. So again, not a direct operating item. In addition to that, we had the adoption of a brand new accounting standard for 2019, the standard on leases, which is really the rental of properties, primarily for retail space and some of our warehouses. And this increased our expenses by $228 million. And we have been in discussions with some of our landlords to get more attractive terms, especially in situations where some of the leases may be in foreign currency, bringing that to the local currency and reduce that volatility there. And then, as mentioned earlier, in 2018, we had a non-recurring gain of $1.13 billion. So if we just take the first item, IAS 19, and look at our operating performance, we're now showing 19%. If we had excluded that IAS 19 non-cash expense, it would have been up 43%. And you can see that from that little table that we would have been up by almost $1.5 billion, or 43%, on a normalized basis. And then if we're to take all of those significant items, those 3 items together, and look at our profit before tax, we'd have actually been up by 23%, or $1.4 billion, when adjusted for those items. So again, it shows that the group has very strong core operating performance and has done very well for 2019. Now I want to just focus on the performance of some of the segments and focus on where we saw the growth. So for revenue, we saw that all 4 of our business segments recorded improved revenue The significant increase was in the food trading division, and where we saw that growth was in our domestic distribution business. So Grace Foods and Services, with the distribution of Catherine's Peak water and some of our core products like mackerel, corned beef, and Vienna sausages. All of those products, the core products, did very well, an increase of over $2 billion in those products, including Catherine's Peak. So we saw very good growth in the domestic business. And then for USA business, also saw growth there as well. On the, and then I don't want to neglect to mention Hilo supermarkets. They had significant growth in some of their core key locations. And then for banking and investments, we saw that First Global Bank had a $4 billion increase in their loan portfolio, and that caused an improvement in our interest income and generally our revenue. In addition to that, GK Capital, which is our investment house, saw improvements in finance, in their corporate finance income, as well as the stockbroking business. In terms of the insurance segment, what we saw is that our general insurance company, GK General Insurance, did very well, showing growth in both the motor and the property portfolio. And then for money services, while the growth was not as strong as other divisions, we did see growth. Some of the islands that were in the new islands were in Cayman and Bahamas, showed growth in their revenue. And then what we're focusing on for 2020 is to grow the digital business for convenience to our customers, both expanding the number of locations available as well as options to do transfers online and do direct to bank, or you can pay your Amazon bill via Pay at Western Union. So finding more convenient ways for our customers to use the service. Okay, in terms of profits, again, we saw all 4 of our segments showing improvements in profit before tax, and 3 of those 4 segments actually had double-digit growth in profits. So a very strong performance. In terms of food, again, the revenue growth helped performance, and then improved margins, in particular for our domestic business and our USA business. And for banking, what we saw is that apart from the revenue growing, we did see improved operational efficiencies. We had initiated a cost restructuring exercise in 2018, and we saw that benefit flowing through to 2019, as well as things like software amortization going down. And then for the insurance segment, we saw good revenue flowing through to the bottom line, as well as improvements in the investment portfolio that the insurance companies hold. And for money services business, whereas we didn't see as strong growth there, we did focus on cost efficiencies and bringing those costs down for money services. So those are the key highlights for 2019. Again, all segments up both in revenue and profits, and our core operating performance showing strong growth of 43% when you normalize for the kind of significant one-off expenses that we had for 2019.
Okay, Andrew, thank you very much. That was excellent and really good overview of our financial performance. I'll now answer a few questions along with Andrew. The first question is actually from Barbados. Marlon Madden. Marlon, thank you very much for the question, and I'll read it. Could you provide an update and talk a little bit about the performance of Signia Financial Group in Barbados since the takeover of Globe Inc. in 2018? Are there any plans to be listed on the Barbados Stock Exchange? Marlon, thanks for that question. The merger with Signia and Globe has gone exceptionally well. The company is operating in a very profitable manner. Our expectations in terms of the merger is being met. Paul Ashby, our Managing Director in Barbados, and by extension, our Chairman, Sir Jeffrey Cave, and the board is doing a fantastic job. So to answer your question, Signia Globe is meeting all our expectations, and the company is operating at a very profitable level. And we're happy at GraceKennedy about that merger or acquisition. Plans to list on the Barbados Stock Exchange. I mean, that is something that we're always looking at the GraceKennedy Group, to see how to unlock or maximize shareholders' value. And that may, in fact, be one option to list Signia Financial Group on the Barbados Stock Exchange. Let me say this company also has Caribbean plans to expand outside of Barbados. So listing may be an attractive vehicle to utilize capital for expansion. Good question, Marlon, and thanks for that. Okay, another question. Could you provide an update and talk a little bit about the performance? Okay, sorry. Other question. What is the estimated cost implication of using alternative suppliers? I assume the cost will increase as a result of high demand, perhaps logistics, etc. And this is from, I think it's Mr. Muirhead. Yes, so while I don't want at this stage to call a percentage figure, I think we can confirm that the alternative suppliers will in fact be on the more expensive side. What you have to remember also is that all countries and all businesses with similar products as GraceKennedy is really going to be going to some of these suppliers. So, so while we see an increase, we're going to try and see how to best manage the cost. But yeah, I can confirm, because of the high demand for these products, we would expect an increase in the cost to us. Okay, this one is for you, Andrew, which I think we answered in the presentation. What led to the decrease in revenue from the UK? And we had said nourishment, but maybe you had to expand on it.
Yes, so the key reason both in the UK and the rest of Europe would have to do with nourishment, decline in the nourishment sales. One of the things that we have done is that we have launched we've put in a new label on the cans, updated and modernized the label for the can. And then we're also introducing a new format, which is to use a screw-top PET bottle, which will allow us to be more versatile, whereas previously with the can, you had to open it and drink it all at once. With the screw-top bottle, you can close it back and reuse, put it in the fridge. So a lot more convenient packaging. So we believe that that will also improve sales as well as additional marketing of the brand in 2020.
Thanks, Andrew. Another question here. Canopy, which you know is our joint venture with the Mussing Group of Companies and GraceKennedy, was successfully launched last year and is expected to be a major disruptor in the insurance industry. What are some of the key metrics that are being tracked? Interesting question. Yes, I can confirm that Canopy, our joint venture with the Mussing Group of Companies, is actually surpassing all our expectations in terms of performance. So you may ask, what are your expectations done in terms of performance? So we look at revenue growth, we look at operating performance, and we look at customer experience in terms of the feedback and the surveys of what are the customers saying about this new health provider. And let me share with you that all the feedback that I've been getting from the customers, all the numbers that I've been looking at, both historical and forward-looking, this company is performing exceptionally well, certainly beyond our expectations. So we are very happy. And Sean Scott, the managing director, is really roll up his sleeves, and he's out there trying to do a good job and gain market share. So we are very happy with the performance of Canopy. Andrew, somebody's asking about a comment I made, and if you can expand on it. That while our P&L got the hit of $1.2 billion from IAS 19, there was another entry on the other comprehensive income for $3 billion, which is more than twice that amount, going straight to our balance sheet. And they're trying to understand that.
Yes. Okay, so with the accounting standard IAS 19, it does have specific rules about what goes to the income statement and what goes to other comprehensive income, which is really in the equity area of the financial statements. So whereas we did get an expense for IAS 19 in the P&L, what we saw was an improvement in the performance of the assets of the pension plan. So the assets of the pension plan grew significantly, and this would have affected other comprehensive income, because what the accounting standards really say is that you put your actual estimates through the P&L, but anything over and above those actual estimates in terms of performance of the plan assets would go through other comprehensive income. So we actually saw, because of that improvement in the assets, and you see it on the balance sheet as well, the other comprehensive income grew, but accounting rules don't allow us to bring that improved asset growth into the P&L. It has to go through equity.
Yeah. I smile while Andrew explained, because as most of you would know that I'm a chartered accountant, and in fact I'm in the Hall of Fame of the Institute of Chartered Accountants of Jamaica. And Andrew, I must say sometimes I'm having a hard time understanding IAS 19, but nevertheless we have to comply with the accounting standard.
Yes.
So thanks for that, Andrew. High-low, this is a very general question. How is high-low doing? I think, Andrew, you did mention that high-low. You want to answer that question?
Sure. A couple of years ago, and certainly up to 2018, we were impacted by the roadworks around the city in particular. What we've seen is a significant improvement since then. We've actually opened a convenience high-low express on this new building at Harbour Street. And so we have seen improvements in many of the stores, improved basket size and count. And so the high-low has been doing very well, both in terms of revenue as well as their core operating performance.
Yeah, and in fact, Andrew, if I may add, December of 2019 was a record sales for the high-low group, significantly so, where all of the supermarkets showed big growth in terms of revenue. It was a total record. The other thing that I'd say about high-low is that we're actually going to be putting up a new supermarket in the Grill along the 7-mile stretch. It's on target, so we should be able to open certainly by the third quarter of this year, and it's really going to be a nice, modern-looking supermarket. So we're very pleased about high-low. You know the lesson behind that for us, colleagues. You'll recall a few years ago we had made a commitment, the GraceKennedy board, to invest over $8 million in refurbishing the high-low stores. And as I said, if you're going to be in the retail business, either you do it properly and reinvest in it, or don't do it at all. And I think our investment of the $8 million, we are now seeing the payback or the rewards for that investment. So we're quite happy with high-low, and we expect it to continue. Continue to grow. The question about $7 million US in New Jersey, it's a little less than that, eh? Yes. Yeah, somebody was asking us $7 million. So we have invested in a new, I like to describe it as a logistics center, first world, in New Jersey, and it has really improved our operational efficiency. It has improved our margin management, and it has improved our customer experience, because we are now in a position to deliver on a timely basis, because a lot of the technology being used in the new warehouse is very efficient, and we can track exactly where the products are right to our customers. And the truth is, when we were there last year, the staff morale and the staff motivation of being in a new warehouse meant a lot to everybody. So those efficiency ratios which I mentioned earlier and margin management, LLC is going to be a big contributor to that. Somebody's reminding me. Expectations from the key acquisitions. Let me start off by saying, you may know already that the offer was closed on March 2nd for Key Insurance. GraceKennedy made an offer to buy out the remaining shareholders up to 80%. We expect, and the directors of Key recommended that the acceptance of our offer. We expect that the settlement will probably close, I'd say probably another week maximum. So we would therefore take effective control of Key, I would say within a week or a little over. One of the things that we have been discussing internally, as you know, is listed on the Junior Stock Exchange, but we think that based on the strategic plans, and I'll outline them in another press briefing, I would think, or another communication to the media and the JC, is that we probably want to list it on the main stock exchange. And I know my legal team, Gail and Kerry and Stephen, who is the investment banker, they are looking at a possibility. We believe that, we have been in the underwriting business for many, many years through GKI, which has been very successful for us. And Key, as you know, has not been doing very well. But we believe that with the plans that we have the ability and the management to turn around this company here. Obviously, there's going to be some synergistic value with Key and GraceKennedy Insurance. So we believe that there's a great possibility of improving the ratios, the operational efficiency ratios of Key. We have done our research. The brand name Key is very strong, is very respected in the Jamaican market. So our plan is actually to keep that brand name, Key Insurance. And we think that it's going to be a success story for GraceKennedy. We're going to be very focused. We're going to put the necessary resources behind it, both human resources, both capital, to ensure that we have a real success story in the acquisition of Key. I'm personally looking forward to it because I can see big things down the road in terms of Key Insurance. So what is driving the lower growth in the money services division? By the way, I'm not sure how this is written properly. Awa? That's the name of the person? Awa Muirhead. Okay, thanks a lot, Awa Muirhead. Really appreciate it. So in terms of the money services division, you would recall we have been discussing the compliance measures for Western Union and for GraceKennedy Money Services. And one of the things that we have said at GraceKennedy and Western Union is that there should be no compromise. We have a zero tolerance in terms of compliance. So we have been really focusing on strengthening our compliance network. And I would say that it has created, if I may say, some inconvenience to customers. There's always going to be a tension between compliance and strategic growth. Our analysis has showed that because of the increased compliance measures, that did in fact have an impact on the growth of our money services business. We have now put that in place in terms of the compliance measures. I think we have communicated it well of why we are doing this, because we're really protecting our customers by increasing these compliance measures. So we are now going to be really refocusing on introducing new products, digital products, woo.com, APN, which means that you can pay directly from the sender to your bank account. We're going to be increasing the network that we have here. And we're going to make our customer experience, our loyal Western Union, GraceKennedy Money Services customers, to have a great experience in terms of their sending and their receiving funds from their family and friends. The biggest opportunity for growth for me is obviously the digital digital products. And let me share something with you. The worldwide, when you look at the growth, the cash to cash, which is the traditional way of sending money, where you go to a location and send money and you pick up cash, that is actually growing throughout the world it's not growing, at 0%, or I've seen figures of 1%, while the digital growth is going at 35 to 40%. So it is very clear where our strategic efforts should be. We want to grow our digital platform as it relates to money services. I'm fairly confident that you're going to see a return to growth in our money services business, certainly within 2020 and definitely within 2021, based on the plans that we have in place. So thanks for that one again. How is GK UK being affected by Brexit? That is an interesting question. You know, when I'm asked that question, it's really early days yet still, because the devil is really the details when these trade arrangements and if there are any duties finalized. We have not seen yet in our business, with the exception of the uncertainty caused by Brexit. You would have noticed that there is some fluctuations with the pound and the US dollar. That became a little bit tricky to manage. But Joe Taff, a retired director of GraceKennedy, it's early days yet. We have a team in place in the UK, carefully studying what is happening. We have some experienced directors on the GK UK board who is reviewing the impact on Brexit. There's one thing that I would say is that we actually have our own factory. Many people really don't know that, in the UK. So in the event that we need to do more manufacturing in the UK, we are prepared to do so. So we'll see. But again, when we get more information, we will update the public in terms of the impact on Brexit. Any plans for a spin-off of GK FG or GK subsidiaries? We're always looking at the structure of the GK group to see how we can, again, maximize shareholders' value. And even if I had an answer, I could not share it with you because that's sensitive information. But just generally speaking, it is important that we always look and see how to maximize our shareholders' value. And history will show that sometimes when you list a subsidiary, it benefits the company as a whole. I'm having a few more questions coming across. Okay. All right. There's one other question. Okay. So the general question is that the GraceKennedy stock actually depreciated over the last few weeks, and that is true. But I want to point out to the person asking the question that the whole market is actually reducing in value. In fact, I saw something on Loop News for yesterday, that Tuesday, yesterday was one of the biggest drops in the stock on the stock exchange. If you ask me why, and speaking to some of the brokers and investors, I think what is happening is that a lot of people are investing in the new IPOs, the Trans-Jamaica IPO. So they want some liquidity, so they would sell some of their current portfolio to reallocate that cash to new IPOs. I think that's the best answer I can give you at this time, because if you look at a lot of the companies on the Jamaica Stock Exchange, with their value actually depreciating, and I don't want to call any specific company, but they are showing very, very strong financial performance, including GraceKennedy. So I guess it's a cycle that we have to study carefully in terms of the ups and downs of investing in the stock market. But I can assure you, the underlying value of GraceKennedy is there to be much more valuable than what it is trading at now. I'm being given the wrap-up signal by Simone Clark Cooper, so I will obey. Ladies and gentlemen, Thank you so much for joining us this afternoon. I'm really hoping, and I'd love to get some feedback from all of you online of how our new Zoom webinar came across. We're always trying to improve how we communicate to our investors, our stakeholders, our shareholders, etc. So if you can give us some feedback so we can try and improve generally on how the webinar came across. So having said that, this brings today's briefing to an end. I want once again thank everyone who took the time to participate. As of tomorrow, right Simone, a link to today's briefing will be available on our corporate website, www.gracekennedy.com. If you have any additional questions, please submit them to gkinvestor@gkco.com. We really value your feedback about this briefing experience, and I would welcome any suggestion that you have to improve this experience for you. Thank you very much. Have a great afternoon and have a great 2020 at Grace Kennedy. We are extremely positive about our company. We are looking forward to 2022 when we become 100 years old, and that is going to be a big occasion for all of us, and I'm sure the results will reflect that. So thanks again, and our next briefing will be for the second quarter results later in the year. Thanks a lot.